Hey everybody, Boris last week PK Forex. So the subject of our discussion in this chapter is the crypto phenomenon. Is it in fact the future of money, or is it really just simply a giant bubble? But as always, before trading foreign exchange or any derivative products, always understand that trading Forex carries a high level of risk, may not be suitable for all investors, and a high degree of leverage can work against you as well as for you, and you should always consult your investment advisor before trading anything on margin and seek advice. An independent financial advisor if you have any doubts. So, is Bitcoin the real deal? That's really the big question, the sort of $64 trillion question that everybody is trying to figure out and understand. Now, the benefits of Bitcoin are quite obvious. It allows you to regulate production of units. Even though these are digital units, they're still essentially, by the nature of the way Bitcoin is made, scarce in their production, and the more you produce, the more resources you put into it, the more resources it requires. So the scarcity is sort of built into the algorithm. It allows you to verify transactions, which is an extremely important value as a digital currency. It is decentralized. Another really great benefit that, of course, many of its proponents argue is its primary value. And of course, it is an anonymous store of value. On the other hand, the very same positives of Bitcoin are also very much its negatives. Let's take a look at them one by one and see where the problems arise. First of all, regulation of production of units simply means that as a monetary unit, as a unit of exchange, it's very inflexible. It's very similar to gold. Those of you who are gold bugs may disagree, but the bottom line is that the last 100 years have completely destroyed the gold standard idea of global economies. Simply having a finite monetary unit in and of itself doesn't actually create an honest economy. It actually creates an incredibly depressive economy, because money in and of itself is a social construct. It's an abstract unit of measure. And the ability to make it out of thin air is incredibly important in social interactions in order to create economic activity. What most people, I think, very much fail to understand is that there is no such thing as real economic activity or fake economic activity. There's only economic activity. And fiat money allows you to expand and contract that activity to the best use of society. By having a sort of a default unit that is very similar to gold, you run into the exact same problem of inflexible monetary policy, which means that you could have a situation like the Great Depression, where for 30 years, the world was essentially in a no-demand environment. Or like in Japan, where for 25 years you had a no-demand environment. Those problems can only be cured two ways. Either through complete bankruptcy or through inflation, which is what fiat currencies achieve. Now, you may hate inflation, you may argue that it's unfair, that it's theft, but it's slow and more acceptable form of theft than bankruptcy. And that's the problem with a Bitcoin-based world. We would be in a situation where essentially the monetary stock of transactions would get stuck. And since no one really controlled the production of units, there would simply could be a pall of demand, like a Great Depression that could never be controlled, because no one would be able to stimulate fake demand in order to create real jobs. That's really what all of Keynesianism is all about. So there is I think, a great philosophical problem with Bitcoin, the same kind of problem that you have with gold. Now, verifying transactions, that's actually an absolutely perfect value of Bitcoin, and there is really no downside to it. And in fact, that core component, the blockchain, can actually be used for dollars, for yen, for euros, for rubles, for yuan, for anything. And if you listen to Jamie Dimon, who is the chairman of JP Morgan Chase, his argument is that digital currencies will exist, but they will exist on the blockchain as dollars, yen, yuan, not as bitcoins, because the federal government, whichever federal government you're talking about, irrespective of any government, is going to want to control the supply and demand of its currency. That's actually the single greatest impracticality of Bitcoin. Because essentially, if you assume that Bitcoin wins, you assume that government loses. Or to put it simply, that we don't have any type of government. We have a sort of a peer-to-peer decentralized world without any kind of social structures. That may sound ideal, and it may certainly sound friction-free and completely libertarian, but it is highly unlikely given humanity's desire for tribalism and nationality. So once you have a nation state, the government is never going to give up its control over the single most important economic tool it has, which is the monetary exchange of value. So the other big problem, of course, with that is not only does the government not want to give up control over the monetary exchange of value, but Bitcoin in and of itself is a massive facilitator of theft and crime. Because if you have essentially it's essentially cash, right? But even cash is traceable. Every single dollar bill or every single euro can be traced, it can be tracked, it can be coded, it can even be probably GSM'd, I don't even know. But Bitcoins cannot. They exist completely anonymously, completely cryptographically, and therefore provide a massive incentive for huge criminality. And that, in and of itself, is something that governments will never tolerate as an idea that takes over large amounts. I mean, if the Cali cartel suddenly decided to generate $5, $6, $7 billion worth of Bitcoin, one of the easiest ways, by the way, to destroy the Cali cartel would be to then completely destroy Bitcoin's value, right? The last thing, and I think this is something completely underestimated as far as problems of Bitcoin, is the fact that it has no practical transaction mechanism. What I mean by that is, if you take a look at, let's say, just something very old-fashioned 20th century Visa or MasterCard transactions, I believe they do something to the order of 2,000 transactions per second. Maybe I'm even factor of 10 wrong. Maybe it's 20,000 transactions per second, but it's a scale that is enormous. It's literally in the billions per day of transactions. None of the cryptocurrencies, Ethereum, Bitcoin, all of them, the bigger they get, the slower they are. They're at 3, 4, 5, 6, 10 transactions per second. None of that in any way, shape, or form creates any kind of a realistic exchange mechanism in a global internet-based economy. So for now, Bitcoin remains very much a store of value, very much a speculative tool, and certainly in no way, shape, or form a realistic currency that anybody could use for common everyday uses. Now, the other big thing is, of course, the rise in Bitcoin has often been compared to the rise in NASDAQ 2000. And the fervor, the type of one-way sentiment, the parabolic moves are certainly very, very similar. You can take a look at these two charts, and there's very little difference between the two of them. The only big question is, and it's interesting that sort of both are on the scale of 5,000. Now the only question is, you really don't know where the Bitcoin scale will end. And one of the reasons why you don't know where the Bitcoin scale will end is because when you look at the valuation, the actual capitalization values of where Bitcoin is at right now versus the NASDAQ at 2000, they are worlds apart. Even though the charts look the same, the actual money behind them is quite different. Bitcoin at this point is basically valued, or all the cryptocurrencies are valued at around, I believe, $87 billion. Let's just call it $100 billion. That's only twice as large as one single massive internet bubble stock called Internet Capital Group from the aughts. Those of you ancient enough to remember that company, I used to trade that company almost every single day as a day trader. It was just another one of those bubblicious companies. You could have put it, maybe it was a little bit better than Pets.com or Webvan, but just another bubble that, of course, had zero value behind it. Now, the thing about crypto is that the capitalization here is much smaller. The total capitalization of NASDAQ was around 6.7 trillion, and they shaved about $1 trillion in a month, and then it really shaved almost, I believe, 80% of the total capitalization before it finally washed out in the end of its bubble. When you look at the complete collapse of the bubble, by 2002, it really came back down to 80% of its original value. It was around 5,000. It came back down to 1,000. So does Bitcoin come down to 1,000? Very probably. The question is, it's just impossible right now to pick a top in this particular trade. It is parabolic. It is not, even though it does look parabolic at these levels on a chart basis, on a valuation basis, it can still go much higher. It could go to maybe $500 billion before it begins to really impinge. I think the interesting question, and that's probably the interesting question, is at what level of capitalization does Bitcoin begin to bother global governments? And I think that's really going to be the level at which you're going to be able to see how the bubble is going to pop. What will pop the bubble? Well, I think the most common scenario, and this, not that I'm predicting this, but the most common scenario is some sort of a uniform global intervention where the Federal Reserve Bank, the ECB, the BOJ, the PBOC essentially issue a joint ban on the trading of Bitcoin or other cryptocurrencies. And that will, in effect, create a pall over the whole market. Because even if many people decide to ignore the ban and trade it offshore and decide to transact individually, it will suck the liquidity out of the transaction, because no legitimate business is going to buck the various governments of the world and really essentially risk the idea of criminal activity, including most human beings will not risk the idea of criminal activity by engaging in Bitcoin transactions. So the key thing about Bitcoin, I think, or the key thing about crypto in general that most enthusiasts simply miss, is that either crypto will have to become traceable, which means that every transaction will have to stop being anonymous, at which point it's really no different than putting dollars on blockchain or putting yen on blockchain, as Jamie Dimon said, or putting euros on blockchain, right? At this point, you don't really need crypto. You simply, you can use the technology, the cryptographic technology, but the unit of exchange can remain the same, or it will be regulated away. That, I think, is the existential problem with cryptocurrency. Is very much its attraction, is also very much its challenge to the powers that be. And the other thing I think that most people really don't understand is that people always say that currencies are sort of backed by the full faith of government that issues them. And that's true to an extent. In other words, people believe in currencies based upon the economic functional value of the countries that they represent them. And all of them, of course, are based on some idea of faith. But I think the other aspect that people really don't appreciate is that currencies are also based upon the military might of the governments that represent them. Currencies are always economic and political assets. And politics, by its very implication, means violence, means power. And power does not like to be challenged. So while the idea of cryptographics and a global distributed system and a peer-to-peer transactionality sounds wonderful, and it should be there, and it will be there in some sort of a friction-free form. The idea of it being non-traceable, the idea of it being anonymous, the idea of it being completely off books is never going to be accepted by the governments as we stand right now. And that, in turn, is what I think is going to create the problem for cryptocurrencies in the long run. But in the meantime, just as with the NASDAQ bubble, the trade continues. And the trade can continue for quite a long time before we reach that point. What I was going to say earlier is probably, and I'm not really making any kind of projection, but I think at about $500 billion, if Bitcoin gets to about $500 billion, at that point, you're going to have some very, very, very serious governmental regulatory oversight over the whole process. And one of the issues that the governments will never give up on is the idea of traceability. Because if you have a non-traceable unit of exchange, you essentially shift economic power away from centralized government to individual human beings. And I don't think that's going to change. But that is really the essence, the existential essence for why long-term Bitcoin simply cannot exist without some sort of governmental support, which in turn means a change of its very essence. So that's how the game shapes up. But for now, the trade very much continues.